Hello everyone, good morning, good afternoon, good evening, depending upon when you're watching this video lecture. In the earlier session related to working capital management, we understood the significance of working capital, need for working capital in an organization, and what is working capital first of all, and how the management of working capital is very important for the organizations so that they maintain a trade-off between liquidity and profitability. Now let us move on to the core aspect of this entire chapter, that is estimation of working capital. As I already told in the earlier session, most of the times the examination question, which will be a 10 marks question normally, can be expected from this particular segment of this chapter, wherein we have to compute or estimate the requirement of working capital for an organization. Once again, working capital is current assets minus current liabilities, that we know. But how to estimate the need and how to estimate the requirement of working capital requires estimation of current assets as well as current liabilities also. For that purpose, there are multiple ways or methods which can be followed. One method is operating cycle concept, wherein we can compute the operating cycle or working capital cycle of an organization, which is generally expressed in number of days, sometimes in months. Accordingly, how much working capital required depending upon the overall operating cost of the organization can be estimated. That is one way of computing the requirements of working capital. Such questions also can be expected, though it is only just one straightforward formula based approach. This question can be expected for only 5 marks using the holding periods of current assets, of course, one major current liability of accounts payable also. That is operating cycle model. Another way of computing the working capital requirements, which we mostly follow in almost all the questions of estimation, is computing as a percentage of or a change of ratio of sales. For example, if sales increase, naturally the working capital needs also will increase, because the production has to increase, and production will not happen automatically. It requires materials, it requires labor cost, it requires overheads cost, all of that needs money. So according to the level of activity of the organization, according to the sales level, since we know the cost requirements of a particular production process, we can estimate the change in the current assets that happens with an estimated level of sales. So that is a kind of applying as a ratio of sales. Rarely though for our purposes, but in reality it can be used, wherein estimation of working capital can also happen as a percentage of fixed investments. Means if from the past history of the organization, if the fixed assets are some X amount, what percentage of that is generally required as working capital? From the past experience, a company can have a percentage or a ratio, which is nothing but ratio of current assets to fixed assets. That is not a specific estimation, that can be just applied on the basis of the past experience of the organization. Like this, working capital requirement estimation can be done in 3 different ways. In that, we are going to solve the problems related to 2 of them. One is operating cycle or working capital cycle. Second one is computing the requirements of working capital as a percentage of sale, simply according to the cost structure of the organization and how much current assets it holds, it is required to hold. Details will be given in the question. All that we need to do is apply those details so that we can estimate the requirements of working capital. Once again, estimating means what? What are we estimating? Estimating how much is the inventories requirement, how much is the receivables requirement, or how much is the cash requirement, how much could be the accounts payables, how much could be prepaid expenses, how much could be other outstanding expenses. All these things are about knowing the operational amounts of various components of working capital, simply current assets and current liabilities. But that is a different model. Operating cycle is a different model. Operating cycle basically looks at of course again the current assets, but it will look at the number of days a particular current asset is staying in the cycle. For example, for accounts receivable, what is the number of days we have to look at? How many number of days it takes to collect particular amount is what has to be known, which is nothing but average collection period, which we should already know as part of ratio analysis. Average collection period is nothing but receivables turnover ratio or debtors turnover ratio. That has to be in the denominator. 360 divided by that will give us accounts receivable or average collection period. So number of days in accounts receivable or average collection period is nothing but this number of days average, on an average it takes to collect money from the customers, naturally credit customers. Here for conceptual clarity, we should not think that each customer will exactly pay after those number of days. Definitely not. Some people may pay before that, some people may after that. This is the average number of days. Average, on an average, analyzing all the accounts receivable in one shot. On an average, how many days it will take to collect the amounts from our credit customers. That is accounts receivable. Days in accounts receivable, or we can simply call it as average collection period. Same way, inventory holding period, we know that can also be analyzed by knowing the average number of days it takes to turn over the sale of a product. So that is inventory turnover ratio, which is in the denominator. If 360 or 365 is in the numerator, we'll get the number of days the inventory is going to be in the godown before it is being sold. In other words, how many number of days the inventory will stay in the store till the point it is converted to either cash or accounts receivable. How inventory can be converted to cash or accounts receivable? Simply by selling it. So how many days it takes on an average for the inventory to be sold is inventory holding period. So accounts receivable collection period, inventory holding period, all of them we know. This segment or operating cycle concept, most of it we already know in the ratio analysis, wherein we call them with just different names, but the concept is same. Same way accounts payable also, it is average payment period, how many number of days it takes to pay a supplier invoice. Again, on an average, accounts payable payment period also can be calculated, which is once again nothing but 360 or 365 divided by creditors turnover ratio. So numerator is 360 or 365 divided by accounts receivable turnover ratio gives us collection period, divided by inventory turnover ratio gives us the holding period, divided by creditors turnover ratio gives us average payables payment period. This is what we already did in the ratio analysis by using those formulae. But we don't need to do two-step process for each of them to be calculated. First calculate turnover ratio, then again 360 divided by that, not required. Straight away, we can use one formula also. We'll see them as part of this discussion related to computation of working capital cycle or operating cycle. So how to get this? If you take an example, look at this one. For example, if company holds raw materials on an average for 60 days, so that is raw material holding period. That is raw materials holding period, not finished goods holding period, raw materials. And it gets credit from supplier for 15 days, which is a negative item because it's good for us. And production process needs 15 days. Finished goods to be held for 30 days. And 30 days credit is extended to the customers or debtors. Then what will be the operating cycle? Simply taking all the items which are current assets as plus and one and only item which is current liability as minus. So raw materials 60 days they will be in the cycle. Then production process will be work in progress. This is raw materials, this is work in progress. That will be 15 days. Even the production completed and finished goods are produced, they are not sold immediately. They are going to stay there for 30 days. That is the finished goods staying period. In other words, that is a finished goods, right? Then, okay, finished goods are sold, but we are not getting cash immediately. We are going to get it after 30 days only from the customers. So, current assets, this 30 days is debtors or receivable, whatever you can call it. So, current assets total in this cycle, they stay for 75 plus 60, total of 135 days will be there. But There is a current liability also where we can get credit from the suppliers 15 days. That should be reduced. So the actual operating cycle here will be how many days? That is 120 days. That is called working capital cycle or operating cycle. Simply to depict it in the form of a diagram, it is where the cash is converted to cash. How? Cash is the one with which the business starts. It spends on various costs, including material, labor, and overhead costs. By spending them, directly finished product will not come, as some work in progress will be there at any particular point of time. So work in progress will be generated, and that work in progress, once the work is completed, becomes finished goods that will stay in the godown as closing stock. This stock is of finished goods, and those finished goods will stay as long as till they are sold. As long as they are not sold, the stock will stay there. But imagine if the finished goods are sold for cash, directly the operating cycle is finished. The receivables will not be there in between. But mostly there will be credit sales also. In that case, the finished goods is not directly converted to cash. This is not happening. Rather, finished goods is first converted to receivables. Then the debtors, after they pay to us, that is converted to cash. So ultimately, converting cash to cash is what is operating cycle. In this various days, the overall process takes. It is not going to happen just in one day. Of course, for some types of businesses, it can happen in one day also. For those street vendors daily who just purchase some vegetables or fruits and they just sell their fruits at the end of the day, that is for them operating cycle is one day. For some other business, operating cycle could be even few hours also. Doesn't matter. But we are not looking about them. We are talking about a huge business, particularly in general a manufacturing business. It will take long time to convert this cash into cash. Whatever that time is, the number of days the raw materials are there in the godown till they are issued to production, the number of days the work in progress is there in the process, that is in the factory, on the floor house, on the floor of the factory, that is work in progress, how many number of days it will be. Then after the production gets completed, how many number of days the finished goods will be in the godown before they are sold. After they are sold, how many number of days it will take for us to collect the money from our customers, that is the receivables. All these are current assets, of course we know that. But we are not talking about the estimation of assets directly. We are talking about the number of days, sometimes months also, but generally days. So if you calculate all these number of days, and from this you have to deduct the number of days when we take credit from our suppliers, then what we get is operating cycle. So simply raw material holding period plus work in progress holding period plus work in progress period can be called as a production process period. How much days it takes for the production to complete. That is work in progress period plus finished goods holding period or inventory holding period plus receivables collection period, number of days sales in receivables, that is called, that is receivables collection period. All these things are current assets side of holding periods. How many days the money is blocked in these current assets is what is told by that. From that number of days of credit payment period, if you deduct, what we get is operating cycle. But definitely every business would like to shorten this operating cycle. But as I told already, each business will have its own nature. All businesses will not have the same type of operating cycle. Depending upon the nature of business, the operating cycle time and duration will change. For example, if you take a Boeing or Airbus or Rafale, Dassault Corporation, who are manufacturing aircraft and all, for them operating cycle will not be 1 year. Maybe it can run into few years, not necessarily in months. It can run into years because it takes long time to do really the actual production of those things. Like shipbuilding companies, aircraft companies, for them operating cycle will not be short. Even for big construction companies, operating cycle will not be short. That can run into number of years. That's okay. But for a normal manufacturing organization which is manufacturing some products, whether it is consumer products or capital goods, in general the operating cycle will be less than 1 year, but not necessarily. So the operating cycle of a business depends upon the nature of business first. But within the nature of business, for example, if Boeing has one operating cycle and Airbus has another operating cycle, if Boeing has a shorter operating cycle than Airbus, that means Boeing is doing a good job than Airbus, as an example, not that they are really doing good. So every business within their field, within their segment, within their sector where they are working, they would like to reduce the period of operating cycle. How to do that? For that, you have to collect the receivables faster so that you can get the cash from the operating cycle quickly. If at all you will receive the debtors slower, then you will have a lot of funds blocked in that, so cash availability will be lesser. Same way, if you can get better credit from the suppliers, that is good, because you increase your cash resources, operating cycle will be still shortened, because minus it is. Minus increases means the original one decreases. So operating cycle can be shortened by getting better credit terms from suppliers. So when it comes to the collections, they have to be quickened. When it comes to the credit payment to the suppliers, credit terms to be negotiated in such a way that we get better and longer credit period. Same way, if the inventory is moving faster, good, that will free up the cash, because that will reduce the time for which the inventory is held by the organization. Naturally, that quickens the operating cycle, that shortens the operating cycle, that quickens the turnover of the inventory. If it is moving slower, that is problem. That will consume more cash and lot of money is blocked in the inventories. Like that, every company would definitely like to have a shorter operating cycle by keeping the current assets period, holding period, shorter. So raw materials better should be there in the godown for lesser period. What can be done for that? Can be just in time and other type of techniques be used. Yes, so that the raw material holding period is shorter. That is what is going to be useful here. If the proper inventory management and materials management techniques are scientifically used, raw material holding period can be reduced. That's an advantage. That reduces the total operating cycle duration. That means number of cycles that can happen in a year will increase. When the number of cycles increase, that means turnover increases, which is good for the organization. So that is the objective of any organization, to keep the raw materials as shorter as possible. Work in progress shorter means what? Production efficiency is more. We are producing quickly. Quickly, again, not with less quality, with the same quality, better efficiency is denoted when the work in progress holding period is better. If a finished goods inventory holding period is shorter, that means what? Your marketing team is doing good. You are able to sell the products quickly. So you don't need to hold the finished stock in the godown for longer time. If the receivables period is shorter, if you are able to collect the receivables quickly, that is a good thing, fantastic. How is it possible? When your receivables team is good, they're following up with the customers, chasing them, asking them money, of course, after the due date is over. Like that, the organizational efficiency, and all of them are operational. None of them is strategic if you observe. All these are operational things only. But operational efficiency of the organization is depicted in the shorter operating cycle or working capital cycle. On the other side, if you want to increase the payables, payment period, that means you got a better negotiating skills and you got better terms from the suppliers for a longer credit period. Like that, shortening of the operating cycle period is the basic operational objective of any organization, we can say. Of course, particularly because of this work in progress, raw materials and all, we are looking at a manufacturing organization. And this operating cycle can be expressed like this, all of them as we already know: R plus W plus F plus D minus C. So what is R? Same. Raw material storage period. What is W? Work in progress holding period or production process period, we can say. F means what? Finished goods storage period. How many days finished goods will be there in the godowns or showrooms. Then D means what? Debtors collection period, debt collection period or receivables collection period. C means what? Credit payment period or credit allowed by our suppliers. These are all expressed generally in the number of days. So by doing this, all adding the 4 and deducting this last one, we will get operating cycle also in number of days. If they are given in months, then we can take months also, but depends upon the data given in the question. Usually it will be number of days. So here, when you are taking days as a basis for computation of operating cycle, how to calculate these, each of the storage periods or holding periods directly without double two-step process. For example, if you want to find out inventory storage period, finished goods storage period or inventory holding period, this one we already know. Just if you remember, it is nothing but 360 or 365 divided by inventory turnover ratio. Then what is inventory turnover ratio? Finished goods we are talking, not the raw materials. Finished goods inventory turnover ratio means what? cost of goods sold by average stock. So cost of goods sold divided by average stock of what? Finished goods. Cost of goods sold, leave it here and take the average stock to the numerator and bring this to the denominator. What will be that? Average stock of finished goods divided by cost of goods sold by 360 or 365, let us say. What is this denominator then? Cost of goods sold per day. That is the formula. So there's nothing new. But instead of doing two steps, first doing inventory turnover ratio, then doing 365 by ITR, not required. Straight away with one formula we can find out. So better to remember these formulae for the working capital chapter, wherein it will be easier also and quicker also to calculate these various holding periods or storage periods. So first let us start with the finished goods only, since we know that already. So finished goods storage period, let us say F, what we denoted it as earlier in this formula. That is what? Average stock of finished goods in the numerator divided by average cost of goods sold per day. That's what it is. Average stock of finished goods divided by cost of goods sold per day is cost of goods sold by 365. That is finished goods storage period. Whether to take 360 or 365 is your choice. If a question clearly gives to take 360, take that. Or if it clearly gives 365, take that. Otherwise, you can take 360 also, 365 also. There should not be any time waste on, array, what should I use? I don't know which one to use. I'm not able to decide. Such kind of dilemma should not be there. As long as the question is silent about it, you can use either of them, no problem. But write a note. For 365 days, you don't need to write a note. For 360 days, if you are taking, write a note. And here has been assumed to be 360 days. That's all. So here, formula is average stock of finished goods divided by average cost of goods sold per day. Same logic if you apply to raw materials. Same numerator is same, but now average stock of what? Not average stock of finished goods. Here we are talking raw material storage period. Raw material storage period means average stock of raw material. So average stock of raw material in the numerator, average only, divided by what? Cost of the raw material consumption per day. Don't take with average and all here in the denominator too seriously. Again, two averages, people may think. This is also some other thing. Average means basically when you have per day, that is average only, no? But what is this in the denominator? Cost of the raw material consumption per day. So raw material consumption divided by 360 or 365 will give that. That is cost of raw material consumption per day. And in the numerator, average stock of raw material will be there. Same with work in progress also. Numerator is always the same. Here, average only. Average of work in progress inventory, that is numerator, divided by cost of production per day. So in the numerator, what is that average we are talking? That average is always opening plus closing by 2. That is the average we are talking in the numerator. So average stock of raw material, average stock of work in progress, average stock of finished goods in the numerator, all of them opening plus closing by 2. But denominator changes. For the raw material storage period, the denominator is here cost of the raw material consumption per day. Whereas for work in progress holding period, denominator is cost of production per day. For finished goods storage period, cost of goods sold per day. That is changing. Denominator is changing. Numerator logic is same. Then coming to the receivables or debtors collection period, numerator once again is same. Average receivables. Average receivables means opening debtors plus closing debtors divided by 2. Then denominator means what? Credit sales per day. Credit sales per day means credit sales divided by 360 or 365. So that is debtors collection period. Logic is same. Then credit period allowed by suppliers, same. Average payables in the numerator means opening creditors plus closing creditors by 2. Denominator is what? Credit purchases per day. So in the denominator, don't worry about average. Of course, it is average, but two averages, if you take in the same formula, maybe a confusion will arise. Rather than having that, better to take simply average in the numerator. Denominator is always per day, per day, per day. Everything per day. But per day of what? Numerator is always average of the thing. Raw materials, work in progress, finished goods, receivables, or creditors. All of them will have opening balance also and closing balance also. Just take the opening balance plus closing balance divided by 2. Numerator is clear. Denominator concept is only changing per day. So for raw material storage period, what has to be taken per day? Raw material consumption cost per day. For work in progress, what has to be taken? Cost of production per day. For finished goods, what has to be taken? Cost of goods sold per day. For debtors, what has to be taken? Credit sales per day, not cash sales, because only credit sales will give rise to debtors. For same way with the creditors, in the denominator, credit purchases per day will be there. So like this, logic if you understand, there is no need to separately by heart this formula. Numerator is always average, that is opening plus closing by 2. Denominator is always per day. But which one per day, that has to be known very, very clearly. Once we know that, this formula can be used to compute the operating cycle, and from the operating cycle also we can compute working capital. How to do that? Let us understand with an illustration. The illustration number 2. From the following information of XYZ Limited, you are required to calculate net operating cycle period. So that is the first thing, major thing that will be naturally. And then number of operating cycles in a year. That is simply nothing but 360 divided by operating cycle period. So here operating cycle period, we are talking about in days. This is expressed. Okay. For that, information is given. Raw material inventory consumed during the entire year is this. Average stock of raw materials is this, like this. All the information is given, but main point here is this. What is that? Number of days in a year to be taken as 360 days. So everywhere, wherever we take, it has to be taken as 360 days. So from that, we need to apply this information in the formula one by one. Let us apply that. First thing first, raw material holding period, we are calling it as what? R. R, what is the formula? Formula is average stock of raw material divided by raw material consumption per day. So average stock of raw material, how much? That is given here. Average stock of raw material is 50,000 rupees. Okay, that is 50,000. Then that is numerator. This is numerator. This is denominator. Simple. So and this is number of days, the ratio. So numerator is 50,000, which is average stock of raw material. Denominator is what? Raw material consumption per day. But what is given here? Per year it is given. If it is for the entire year 6 lakhs, how much it will be per day? Raw material consumed during the year is 6 lakhs. Per year. Per day, how much will that be? For that, we just need to find out. 6 lakhs divided by 360, since it is very clearly given, 360. So that will be the denominator. So how many number of days the raw material will be in the go down on an average? 30 days it will be. That is R. Done. Second, work in progress inventory is 5 lakhs. Average work in progress inventory is 30,000. So 30,000 is the average. Let us call this W. Okay. That is work in progress inventory here is basically the total of that 5 lakhs. But that is for the year divided by 360 days only here to be taken. So 5 lakhs divided by 360. That will be how much? Whatever it is. Then average stock of work in progress divided by per day, that will be approximately coming to 22 days. That is W. So raw material storage period is 30 days. Work in progress holding period is 22 days. So here, instead of work in progress inventory, let us call this as cost of production. That is better. Per year. That is given. And we have 22 days of work in progress on an average, we can say. Then there is cost of goods sold during the year, 8 lakhs, and average stock of finished goods is 40,000. Same way, this is finished goods, take 40,000 here, and then 8 lakhs divided by 360. Per day, how much is the cost of goods sold? That will be denominator. So 40,000 divided by that will give 18 days. That is the finished goods holding period. Then the other things are directly given. We don't need to calculate. The average collection period from debtors is 45 days, directly given. That is debtors. Creditors, that is average credit period availed by us, is 30 days. So that is credit hours. This is 30. Let us call this as minus 30. So what is going to be the working capital cycle or average operating cycle for this organization is 85 days. Adding all of them with R plus W plus F plus D minus C. Doing that, we get 85 days of operating cycle. That is first question. Second question asks, how many number of cycles will be there in a year? If there are 85 days each time, if each cycle is taking 85 days, how many cycles it can have like that in the year? Year has how many days? 360 days according to this. Divided by 85. How many cycles it can be? Around 4.26 cycles or 4.23, whatever it is. So times, that is, we can call it as number of operating cycles in a particular year. Okay, that is the way to compute operating cycle. And if we know the average annual operating cost, then we can even know how much is going to be the working capital requirement. Since in this question that is not asked, only operating cycle and number of cycles is asked, we have computed that only average operating cycle as well as the number of cycles that can be there in a year. That is about first type of method. That is one type of question which can be expected also, which was asked earlier in many examinations, but usually it will be for 5 marks. If it is for 10 marks, you need to write elaborately. Every formula, substitution, everything has to be shown more elaborately. If it is 5 marks, just show the formula, substitute, answer. Formula, substitute, answer. So usually it will be for 5 marks, computation of operating cycle and working capital requirements if asked in the question. Before going to the other method, a similar question was given here, that is at the end of the chapter for computation of same operating cycle only. So let us look at this in the practical problems at the end of the chapter. Following information is forecasted by R Limited for the year ending whatever 31st March 2020. Opening balances and closing balances are given. Average is not directly given. We have to find out average. Can't we find out very easily? Yes, we can. So what is the average of all these things that can be found out? Average stock of raw materials, average stock of work in progress, average stock of finished goods can be first calculated so that we have them handy. What are those? 65 plus 45 by 2. Opening plus closing by 2. Simple. So 65 plus 45 divided by 2. That is 55 lakhs. Same way. 51 plus 35 by 2. 51 plus 35 by 2. 70 plus 60 by 2. That is average stock of finished goods. From this information, that is the only thing that is required for us. So straight away you can just calculate it as part of working notes. Same way, receivables and payables also average can be taken. Average receivables, average payables. Average receivables will be how much? 135 plus 1112 by 2. Opening plus closing by 2. 135 plus 112 divided by 2. Then payables, 71 plus 68. 71 plus 68 by 2. That is the payables average amount, opening and closing divided by 2. That is the information which we require for numerator, all of them. All of them are related to numerator. Now we need denominator also. For denominator we need per day consumption and per day cost of production, per day cost of goods sold, etc. Then here it is given annual purchase of the raw material all credit, that is 400 lakhs is purchase of raw materials. But what we need here, be careful, do we need purchase or consumption of raw material here? For the raw material holding period, we need consumption, not purchase. How to get consumption? Simple. We know the opening stock of raw materials, we know the closing stock of raw materials, we know the purchases. So how the consumption will come? Consumption will be simply nothing but opening stock 65 plus 65 plus purchases. Sorry, is that opening stock? No, 45 is the opening stock. 45 plus purchases 400 minus closing stock of raw material 65. That is consumption of raw material for the entire year. But we need what? Per day. Any information about the question? Yes, it is given very clearly. Take 1 year equal to 365 days. You have to search for this. It will be given generally in the question so that uniformity in answers can be maintained. So take 365 only. So average raw material consumed per day, which is the denominator, is this much, whatever it is. So this is the numerator, this is the denominator. Then work in progress. For that we need cost of production per day, average per day. So simply 450 given here. Annual cost of production is 450. So 450 divided by 365. That's it. Then for finished goods we need cost of goods sold per day. So that will be how much? 525 divided by 365. For receivables we need credit sales per day given. Annual sales all credit per day. That is 585 divided by 365. Per day sales will be that much. Then for payables we need purchases per day. That is given already. So this 400 is not consumption, that is purchases. That is the only main point here to be noted, because consumption is different, purchases are different. Purchase of raw material is useful for creditors computation. For that purpose, what are the annual purchases given? But what we need is not annual. What we need is how much is the raw material purchased per day. Since all are credit, directly this can be taken. That's all. We have the numerator, we have the denominator. Simply calculate them in number of days. Don't take the decimals in reality in the examination. Straight away take the number of days here. Then for the average payables, it should be minus, or you can directly take plus also, but in the formula you have to have minus anyway. So that is the operating cycle period. Now answer for first question. How much is that? 147 days is the operating cycle period. I'll just check the answer. Should be 46, 47. That's okay. That will be depending upon the computation. So here this is 146 or 47, whatever. That is the number of days of operating cycle. But that is not the only question. Also what was asked? Number of operating cycles in the year. So same way, simply because year is given as 365 days, 365 divided by 147 whatever, that will give us around 2.5 cycles per year. That's it. 2.5 times the operating cycle will rotate in the year. That is the answer for second question. But the question is not over. Third question asks amount of working capital requirement. How to get amount of working capital requirement? Simple. Annual operating cost divided by number of operating cycles. So here 325 lakhs is the annual operating cost which is given directly. That is annual operating cost. That is for the entire year. So at every time do you need 325 lakhs? No need, because the operating cycle rotates not just once, it rotates 2.5 times. So each time how much you require? That is working capital requirement. So 325 divided by 2.5 is the working capital requirement. That can be taken as around 130 lakhs. 130 lakhs is the working capital requirement for this organization. That's it. That is how we calculate the operating cycle, also number of operating cycles, also working capital requirement. That is possible to be asked as an examination question. So that is one model we can say as far as this chapter is concerned. Now let us look at another way of estimation of different components of current assets and current liabilities. So here we will take the production according to the actual estimation, and on the basis of that cost which is associated with each of them, we can find out how much of raw material inventory will be required, how much of work in progress inventory will be required, like that, how much of finished goods will have to be maintained at every time, how much is the funds invested in each of these current assets can be found out using this common point. No need to bear the formula, and once again just understand the concept, apply them in the problems which we are going to solve. How to get this? For example, if you take the estimated production in units and estimated cost per unit, which cost we are talking? Raw material cost, not the total cost of production or something. Raw material cost per unit. What we will get? Raw material cost for the entire year. That is for the entire year. But raw material storage period is lesser than that. So each time, how much you will require? Only that much you will require. So that is why you multiply that with the average raw material storage period, which will be given in the question, divided by 12 or 365 or 52, according to whether we are calculating or the data given is related to months or days or weeks. Whatever it could be, don't be rigid in this. According to the information given, we have to find out. But uniformly you have to find out. If you want to take months, you take months for all the types of current assets. If you want to take days only. If you want to take weeks, only weeks, according to the information given. Don't try to convert everything into one thing. If all the items are given in one way, do like that. If, for example, some items are given in days and some items are given in weeks, then it is your choice. Unless otherwise specifically asked by the question, you can compute it in days also or weeks also. Of course, in this case, we are not computing the days are given. We are not computing the weeks. Those are given, months or something. The holding period, storage period, earlier what we calculated is already given. What we are doing here, reverse calculation. Because we want now the raw materials inventory. How much inventory of raw materials will be required? Simply, raw material consumption that is going to happen in the entire year. How to get that? Production into estimated cost per unit. Multiply with number of days of raw material storage period divided by 365 days or 360 days or 12 months or 52 weeks. Any of them can be used depending upon the situation. The logic is same for every type of current assets. For work in progress inventory also same. Estimated production is the final goods. In that estimated production, that multiply with estimated work in progress cost per unit, multiply with average work in progress holding period divided by 12 or 365. Same with finished goods also. Finished goods. Estimated cost of production per unit here has to be taken. Estimated production will be multiplied with that. That gives the total cost of production for the entire year. This one, this multiplication of these two will give the total cost of production for the entire year. Multiply with number of days the finished goods will be in the storage divided by 365 days. Same with receivables. But be careful here. Here we will take estimated cost of sales. Here we take cost of sales per unit. And in this case, better to take exclusive of depreciation. Why? Because that is not a cash cost. Really how much is blocked in debtors, that only has to be taken. That is the reason, instead of taking the selling price, instead of taking the final amount that will be collected from the debtors, our requirement here is to know not the number of days the debtors will generally pay us. That is known already. Average collection period is already known in this case. What we are now willing to find out is how much debtors will be blocked. For us, how much is the working capital requirement we are looking at. For us, not for them. For us means for us, what is the blocked amount? Profit also is blocked? No. That cannot be considered to be a blocked amount. Yes, it's an opportunity foregone. But definitely, we should take ideally cost of sales per unit, that too, exclusive of depreciation preferably, then multiply with the number of units of credit sales. We get the cost of the credit sales. not the credit sales, cost of the credit sales. That too, cash cost of credit sales we can say. Cash cost of credit sales multiplied with collection period divided by 12, 365, 360, 52, whatever. So this multiplication and division is common. How many number of days or weeks the raw materials will be in the godown, work in progress will be in the factory, finished goods will be in the godown, debtors will be still paying, that will be pending. Same way, other things like creditors also can be taken for current liabilities. But prior to that, cash and cash equivalents generally will be given in the question, because that is not something to be estimated by us. That the organization knows how much cash and bank balances ideally they have to maintain. That will also be added to the current assets as safety. So how much cash has to be also given in the question, that will be taken. So other four we have to calculate: raw material inventory, work in progress inventory, finished goods, and receivables. All these current assets, prepaid expenses, if any, they have to be also calculated. And cash equivalents will be given. All of them is what? Nothing but total of current assets. Simple. When we want to know working capital, we need to know how much is the estimated requirement of current assets. Then current liabilities will have to be deducted from that. So how to compute the current liabilities? Logic is still the same once again. First thing first, estimated credit purchases for the entire year. Here we are talking. For the entire year, how much will be the credit purchases into credit period allowed by suppliers divided by 12 or 365. That gives us trade payables. Like that, there could be outstanding wages. Sometimes it is called as lag in payment of wages. Lag in payment of wages can be also calculated. How? Labor cost, whatever way. If it is given in hourly basis, we'll do that. If it is given per unit, we'll take that. So don't by heart this formula, understand the concept only. Labor cost per year into average time lag in payment of wages divided by 12 or 365. So that is outstanding wages or lag in payment of wages. Same way there could be lag in payment of overheads. How many days? Whatever number of days divided by 360 or 365 multiplied with estimated overheads. So this is how current liabilities will be calculated. Current assets minus of current liabilities will give us working capital estimation. That's it. The logic, if you understand, the way we calculate is more or less the same, but main point is what are we considering here? This multiplying with, let us say, 15 days by 365 days is not a big deal. This everybody will do. So this right side portion, this portion is not the important point. That is given in the question straight away. What is the important portion? This portion is important. This portion is important. That is what we should calculate carefully. This portion is important. Same way, this portion is important here. So simply, how much is the amount with which we have to multiply the holding periods or storage periods divided by always 365, 360, 52, 12 as the case may be. So that is the important point to be noted. For raw materials, what should be taken? Naturally, the consumption of raw material, cost of raw materials consumed per year has to be taken. For work in progress, what has to be taken? Work in progress cost per unit, if you know, multiply with the production, that will be taken. That is only one of the ways of calculating. Depending upon the information, you have to do the computation of work in progress. Then finished goods has to be taken at cost of production. Finished goods has to be taken not at cost of goods sold and all. So question comes here once again. This is an eternal question. Should administration overheads be included in the cost of production? Should they be included in the valuation of finished goods? Sometimes yes, sometimes no. While preparing cost sheet in costing, sometimes we include the administration overheads also, assuming that those are related to production. So those all things are not required here. If nothing is given in the question, simply ignore the administration overheads for the purpose of finished goods valuation. Only cost of production you take, ignore admin overheads, ignore selling and distribution overheads. But cost of sales definitely will include, which is required for the computation of debtors. That includes admin overheads also, selling and distribution overheads also, but excludes non-cash expenditure like depreciation, and only cost of sales will have to be taken, but not selling price ideally. So cash cost of credit sales is what has to be taken for debtors computation. These are the things to be taken. Multiply with the number of days divided by 365. Multiplied with the number of months divided by 12. Multiplied with the number of weeks divided by 52, as the case may be. So that multiplication and division after what we compute the core item is just a arithmetical exercise. The core item is important. Once again, I'm repeating. Cost of raw materials consumed is the core item for the first thing. Cost of the work in progress is the second thing. Cost of production is the third thing annually, naturally. And cost of sales, cash cost of sales, that to cash cost of credit sales is for the fourth item, the core thing. Multiply with number of days of holding or storage divided by the 365 or 360, whatever the case may be. That's it. That is the one. If you understand this logic, any type of question, depending upon information, we can solve. 10 marks can be easily obtained from this. Every exam will automatically have 10 marks question from the working capital management, that is for sure. So that has to be pocketed by thoroughly understanding the concept of this, as well as applying this concept to the problem according to information given in the problem. What happens in majority of the cases in this type of situations is people take this mechanically. They take it as a procedure, they take it as like steps, and then they follow the same thing irrespective of the question, whatever it asks and whatever it is giving the information. No, that is the biggest problem. If you do that, there is a possibility that your answer can go wrong. So you have to approach the question according to the information given in the question. Solution finally is going to be same, which is the estimation of working capital requirement, and information given in the question has to be identified whether it is matching to this or not. If it is not matching, we have to make it matching. That is our job. So that is how approach to questions and reading the question and information given in the question to be read very carefully is very, very important. Remaining things are mostly clerical and arithmetic. Like this for trade payables also, core thing is annual credit purchases. So again, understand the difference here. When you look at the raw materials inventory, that is the materials consumption. When you look at the trade payables here, that is the materials not consumption, materials purchased. Consumption and purchase need not be same. Sometimes they can be same also, but not necessarily same. These are small things have to be identified carefully when we approach the problems. Same with lag in payment of wages, lag in payment of overheads. Like this, if we do, we'll get the total working capital requirement. Simply finding out current assets, which are consisting of inventories, separately noting them, raw material, work in progress, finished goods, then receivables, then cash balance also, that will be given in the question, all of them to be taken into the account while estimating the working capital. Then you have to write that as gross working capital. We know what is gross working capital. Gross working capital is nothing but total of current assets. From that, current liabilities could be many. There could be trade payables, bills payables, outstanding wages, outstanding overheads, any other outstanding expenses can be there. All of them are current liabilities. They have to be taken. Then excess of current assets over current liabilities is what is working capital. That is 1 minus 2. But is that the final thing? No. There could be sometimes given an information that safety margin to be added to this. Just for buffer, for safety, some contingencies we can say 10% to be added, 20% to be added, like that. Whatever. Information given in the question, according to that, add it. If it is not there, not there. If it is there, add that also. Then you get the final required net working capital of an organization. This is the process of estimating working capital requirements. Now let us apply this in one of the illustrations. This is how typically the questions will be expected in the examination. On 1st January, the managing director of Naurin Limited wishes to know the amount of working capital that will be required during the year. From the following information, prepare the working capital requirement forecast. We are forecasting the working capital requirement according to the information that is given in the question. Important information has to be identified very carefully. First thing first. Production during the previous year was 60,000 units, that is production. It is planned that this level of activity would be maintained during the present year also. So last year it was 60,000, this year also production is going to be 60,000 units only. Second, expected ratios of the cost to selling prices are like this. Raw materials 60%, direct wages 10% and overheads 20%. That means what we should understand. Imagine if the selling price is 100, raw material cost is 60, direct wages cost is 10, overheads cost is 20. That's all. But what about the remaining 10? Naturally profit. These are costs. This is profit. Cost plus profit is selling price. So the breakup of various items within the selling price are given. 60% raw material cost, 10% labor cost, 20% overheads cost, 10% profit is the percentages wise that is given. For that purpose, since the question has given here, selling price is 5 rupees per unit. Straight away we can take it how this 5 rupees is to be split. Out of that, raw materials will be how much? 60% means 3 rupees. Then labor, wages cost in this 5 rupees. On selling price he has given, not in the cost. Cost to selling price it is. So in this wages cost will be 10% means how much? 0.5. For overheads it is 20% of 5 rupees means 1, and remaining 0.5 is profit. That's it. This is the cost structure. So how the selling price is divided into various costs and profit is given indirectly. Now raw materials are expected to remain in store for an average of 2 months before issue to production. So months is the word used here. So we take months, no problem. Months, days, anything can be taken according to information given in the question. So how many number of days raw materials will be there in the store? 2 months before issue to production. Each unit is expected to be in process for 1 month. In process means what? Work in progress. It will be work in progress for 1 month. But read the information carefully. The raw materials being fed into the pipeline immediately. In other words, raw materials will be there in the process for the entire month, total month, because they are going to be fed into the pipeline immediately. Fed into the pipeline means production process at the beginning of the month. So they will be there during the entire month as part of work in progress. But labor and overhead costs accruing evenly during the month. So here work in progress also includes the raw material cost, it also includes the labor cost, it also includes the overheads cost. The question is, in this paragraph, for the raw materials, it is going to stay there for entire month because it is inputted in the beginning of the month, whereas labor and overhead costs are inputted or incurred evenly during the month. Do you know exactly how much? We don't know that. So there is no option but to take average. That means that at the beginning of the month there is nothing. End of the month completely that is done. So in between labor and overheads are incurred. So how to take average? Average is nothing but half. Since it is 1 month, for labor and overheads we can take half month as they are staying in the process. That is the point here. So in other words, raw material 100%, labor and overheads 50%. Of what? Of the work in progress period, which is 1 month. That is given. Then finished goods will stay in the warehouse awaiting dispatch to customers for 3 months. That is given. Credit allowed by creditors is 2 months from the date of delivery of raw material, that is the payable period. Credit allowed to debtors is 3 months from the date of dispatch. So all the details related to the number of days is given, and there is a selling price which is given, and there is a regular production and sales cycle. This is normally the assumption that we take because we are taking on an average everything. If an organization really is a very seasonal organization, then these averages may not work out because in one season they may require more working capital, in another season they may not require that much working capital. So that type of exceptions we generally don't take. Normally, if nothing is mentioned, production and sales happen evenly, regularly throughout the year. That is the basic assumption. Wages and overheads are paid on the first of the month for the previous month. That means there is a lag in wages and lag in payment of overheads that also were 1 month. So current month's wages are paid in next month. So lag in payment of wages and overheads is 1 month. Then the company normally keeps cash in hand to the extent of 20,000, which is also part of the current assets. This is the information given. From this, we need to estimate the working capital requirements. How to do that? How to do that? Of course, we need to compute the working capital by taking the main answer always will be like this. So the statement showing computation of or estimation of working capital requirements. First of all, there will be current assets. Within that, we need to know definitely inventories. Within that, there will be raw materials, there will be work in progress, and there will be finished goods. Then there are accounts receivable, debtors, nothing but. Then there will be cash and cash equivalents. Right? Leave some space so that if any other item of prepaid or something is there, that can be taken. Those are all current assets. Then we have to take current liabilities. Current liabilities generally will be what? Creditors. Let us call them accounts payable, Then in this particular question, definitely there is lag in payment of wages and overheads. So lag in payment of wages, lag in payment of overheads. Both of them have to be taken here as current liabilities. But for that purpose, to compute this, first of all, we should know what are the core items. Again, that can happen preferably if we have a proper cost sheet as a working note. Preferably. Because we need various things. We need the raw material consumption, we need the work in progress also for various things, we need that. Or directly also we can calculate if it is comfortable. But preferably if you can have a cost sheet with all the data, then that will be much better. Let us take the cost sheet as one of the working notes. In that, one by one, raw material consumption has to be taken. How many number of units of output is being produced? That is 60,000 units. 60,000 units. And what is the raw material cost per unit? We know that that is 3 rupees. So 1,80,000 rupees is the raw material consumption per annum. So 60,000 into 3, that is the 1,80,000 rupees consumption of raw materials per annum. Now the question comes, what about the opening stock and closing stock of raw materials? Normally, if it is a freshly started company, there will not be any opening stock. There will be only closing stock, which can be reduced here. Right? Already consumption itself means that, because we don't know purchases. If at all we have purchases, then opening stock plus purchases minus closing stock is raw material consumption. But here, already we have raw material consumption directly. 60,000 units is the production finally, and on that 3 rupees is what is the consumption of raw materials directly that can be taken. Next, how much will be the wages cost? Direct wages. Direct wages will be 0.5 per unit, that we know. So 60,000 into 0.5, that is per annum direct wages cost. Like that, overheads will be 20% of 5 rupees means 1 rupee, and 60,000 units means 60,000 only. That is a overheads cost. That is total cost of production, we can say. But again, points to be noted here. Work in progress, for whatever we have to compute, since there is no information given that this is a new company or something, it is already an existing company when nothing is mentioned. We have to assume that the opening stock of work in progress and the closing stock of work in progress is one and the same. Same way, opening stock of finished goods and closing stock of finished goods is one and the same when no information is given. Same with raw materials also. Opening stock and closing stock of raw materials stock is same unless otherwise stated. Since it is not a new company, if it is a fresh company, calculations will be different. Since it is not a new company, for a normal company, usually the same type of production it has done in the last year also. Same cost structure was there in the last year also. Same production is done now also, and same production and same cost structure is now also. How can there be much difference in any of the stocks? There will not be any difference in the stocks. So the stocks of raw materials, work in progress and finished goods are to be considered as opening and closing one and the same. So in the cost sheet, we don't need that plus and minus, because plus and minus both are same. So ultimately, what is going to be the overall cost of production? Cost of production, or even cost of the cost of production only we can call that, because that is the thing for production. And since opening stock of finished goods and closing stock of finished goods is considered to be same, The same thing is cost of sales also, because add opening stock, deduct closing stock, ultimately same. When both are same, there is no point. If we want to calculate, we can calculate, but there is no point in that. Cost of production and cost of sales also are one and the same. Why? Because opening stock and closing stock of finished goods are supposed to be same. That is cost of sales. And in the cost structure, since the sale price is given, sales can be taken directly. How many number of units? Same 60,000 units have to be sold, because there is no difference in opening stock and closing stock. So production will be equal to sales, 5 rupees. So naturally, profit is going to be 30,000 rupees. This is what cost sheet in total we have taken for the entire year. Earlier we did that here for the per unit level. Now we have taken the same thing for total entire year. This is not compulsory. For getting the amounts handy, this can be very helpful. Now straight away we can have a lot of easy calculations. Now look at that. In the current assets, raw materials stock we need. Raw materials stock is nothing but the cost of raw materials consumed into raw materials holding period divided by 360 or 365. What you have to take here? No, not 365. We have everything is given in months. So in this case, raw materials are expected to remain in store for an average of 2 months before issue to production. Means into 2 by 12. Which into 2 by 12? This into 2 by 12. Raw material consumption into 2 by 12. So raw material consumption is how much? That is 1,80,000 into 2 by 12. That itself will be the raw material stock. Of course, opening also, closing also. We don't need about opening. We need closing, which is the estimated raw material stock at the end of the period. That is 30,000 rupees. Next, work in progress is an important calculation that has to be done separately. That work in progress calculation has to be done separately. So let us do that. Work in progress calculation. Because work in progress will have all the 3 items. It will have raw materials also. It will have direct wages also. It will have overheads also. Right? All the 3 items will be there. So how much of that will be as part of the work in progress? For that, we need the data related to how much it will be in the process for. It will be for 1 month it is given. So for 1 month, everything will be in process. So how to get that? Simple. 60,000 units produced total, multiply with raw material cost per unit is 3 rupees, multiplied with 1 by 12. That will be there in the work in progress. Means 15,000 worth of raw material will be stuck in work in progress. Same way. How much of that will be in the form of direct wages? Same 60,000, but instead of 3 rupees, here we have only 0.5 rupees. And one more point to be noted. Here we have half month only to be taken. Half month only. Why? Let us take another 0.5. That is, since wages and overheads are incurred evenly during the month, not they are introduced in the beginning. So 0.5 is cost per unit. 0.5 here is half month, which is just to take an average. So how much will that be? That will be 1250. Same way, for overheads, 60,000 into 1 rupee, but for half month only, into 1 by 12 or half by 12, 0.5 by 12, both are same. So that is going to be 2,500. So the total of work in progress is going to be 18,750. That is work in progress calculation separately to be done. Then finished goods. What is given in the question? It is given in the question that finished goods will stay in the warehouse awaiting dispatch to customers for 3 months. 3 months. So finished goods have to be taken on the basis of cost of sales, cost of goods sold, or cost of production normally to be taken. But in this case, since there is no administration overhead, selling and distribution, nothing specially is given, 2,70,000 itself can be taken as the overall cost of production also and cost of sales also. There is no difference in that. So same 2,70,000 can be taken. So 2,70,000 into 3 by 12 will be the finished goods, that is 67,500. Then accounts receivable, credit allowed to debtors is 3 months. So that is also 3 months. Again, normally there could be difference between cost of goods sold and cost of sales. In this case, since it is not there, since cost of production is equal to cost of sales, both are same. Accounts receivable also, since it is 3 months, it will be also same. 2,70,000 into 3 by 12, 67,500. Incidentally, debtors and finished goods are same, not necessarily. Next, cash, it is given as 20,000 rupees according to the question. So these are the various current assets. Leave that apart. Then coming to the current liabilities, accounts payables. Credit allowed by creditors is 2 months from the date of delivery of raw material. So 2 months means, again, purchases and consumption are same. Why purchases and consumption are same again? Since there is no fresh beginning of the company, it is an existing company. So raw material consumption itself will be raw material purchase also. How much is raw material consumption? 1,80,000. So 1,80,000 itself is a purchase also. But how many months here? 2 months is the credit allowed by creditors into 2 by 12. So incidentally, this is also 2 months. This is also 2 months. So the raw material stock and accounts payable are same. Don't think they will be always same. No. Then lag in payment of wages is going to be 1 month. But how much is the wages cost? For this purpose, the cost sheet will be helpful for us now directly. How much is the wages cost? That we know. 30,000 into 1 by 12. Lag in payment of wages. Lag in payment of overheads. Same way. Overheads are 60,000 into 1 by 12. Straight away. So these are the current liabilities. Anything else? That's all. No other things are there. So raw material stock, work in progress stock, finished goods stock, debtors, cash, creditors, lag in payment of wages, lag in payment of overheads. All of them are given. No buffer, no contingency, nothing is given. Now that we have the total of current assets and also the total of current liabilities here. Simply, how much will be the working capital requirement? That will be current assets minus current liabilities. That is 1,66,250. That is the working capital requirement for this organization. That naturally should be the final answer. 1,66,250. Explanation and all is given. Presentation has to be taken carefully. After adding all of that and all, finally the final answer should be 1,66,250. So this is the main answer. Ideally, in the main examination, this should be first. Working note should come later, because this will have more or less the same components. You don't have to break your head, sorry, what should I do here? Everything will be same. What will be there in current assets? All are same. There will be raw material inventory, work in progress, finished goods, debtors, cash. Maybe leave some couple of lines if at all there is any prepaid expenses, if at all. That's all. Current liabilities, 4-5 lines will be there maximum. Definitely creditors will be there. Lag in payment of wages, lag in payment of overheads will be there. That's it. So current assets minus current liabilities will give us working capital estimation 1,66,250. That is the way we estimate the working capital requirements from the information that is given in the question. And one of the points here to be noted is the stocks, all of them, raw materials also, work in progress also, and finished goods also are assumed to be same at the beginning of the year as well as at the end of the year. Why? Because it is not a new organization. If it is a new organization, then it will be different. That is one point to be noted. And another point, as we already discussed, when it comes to the debtors particularly, we have to take cash cost. Even for finished goods also, if depreciation is included in the cost of production, is it good to include that? No. Better thing is to compute it on cash cost basis. Whether it is asked in the question or not, it is already better. It is more scientific to compute the working capital requirements on cash cost basis. So cash cost basis is nothing but exclude depreciation in the costs. That's it. Where will be depreciation? It will be naturally in the closing stock of finished goods and the debtors. That's it. From them, take out depreciation, you get cash cost. Let us look at one of the other questions wherein cash cost working capital is asked. The following annual figures relate to XYZ company. Sales directly given, materials consumed, suppliers extend 2 months credit is 9 lakhs, wages paid is 7,20,000, but there is a 1 month lag. Cash manufacturing, see already cash manufacturing expenses are given, that is 9,60,000. Administration expenses 2,40,000, but 1 month lag is there. Sales promotion expenses paid in advance, not in arrears. They are paid in advance, means it's a current asset. So prepaid expenses will be there, but total annually 1,20,000. Quarterly they are paid in advance. The company sells its products on a gross profit of 25%. Then depreciation is considered as part of the cost of production. Depreciation is considered as part of the cost of production. It keeps 1 month's stock each of raw materials and finished goods and a cash balance of 1 lakh. So 1 month stock of raw materials also, 1 month stock of finished goods also. Assuming a 20% safety margin, compute the working capital requirements of the company on cash cost basis. Another important point here is ignore work in progress. When it is given ignore work in progress, ignore. That actually makes the solution easier. In case of work in progress is also there, then we have to ask another question, whether work in progress is 100% materials, wages and overheads, or is it only 100% materials plus 50% wages and overheads, depending upon the information given. If nothing is given, we should take like that. Usually materials 100%, wages and overheads 50-50%. Work in progress. Valuation will be completely different. Since it is not there here, no need to worry about that at all. That is the question. Compute the working capital requirements of the company. And as usual, as I said, it is better to have cost sheet after having the basic format. Format is the same. Only the amounts will change, and of course, not necessarily the cost sheet format is same always. But current assets include inventories. Inventories include raw materials. In this case, there is no need of work in progress, so delete that. Raw materials and finished goods inventories only will be there. Accounts receivables, cash is there, total of current assets, and there is one prepaid expenses is also there. In this case, that is a total of current assets. And then accounts payable, of course, will be there. Suppliers extend 2 months credit, it is given. And lag in payment of wages is there. Then lag in payment of overheads, manufacturing expenses is also there. That's it. Still administration expenses are also there. Lag in payment of administration expenses is also there. One more. Lag in payment of administration expenses also there. So according to the question, format will change. So first, always in the examination, main point should be heading, of course, statement showing computation of the working capital requirements of XYZ company. That is the main answer. Format, keep it ready. Format will be more or less the same. Leave some space if you have some doubts, so that if any new thing comes, it can be inserted. But format is more or less the same. Current assets will be more or less the same. Current liabilities also will be more or less the same. In this case, current liabilities are a little different. More are there. Wages also lag there. Manufacturing expenses, they are paid in arrear. Means later they are paid. Means that is also a lag. Advance means prepaid expenses. Sales promotion expenses are paid in advance. So these are the various things which are there as part of the current assets and current liabilities. So leave it apart. That is the format. Now, before going ahead with the computational things, let us first have the cost sheet carefully so that we can use these numbers directly. First thing first, materials consumed is given. Materials consumed is 9 lakhs rupees. Okay. Then this is over. Materials consumed 9 lakhs rupees. Then wages is 7 lakhs 20,000 rupees. 7 lakh 20,000 rupees. Then overheads have so many types. We cannot directly take one overhead here. Different types of overheads are there. First, let us take manufacturing overheads. Cash manufacturing overheads. Cash manufacturing overheads are given as 9 lakh 60,000. Okay. Up to here, this is the cost of production, right? But this is cash cost of production. Cash cost of production, that is 25 lakhs 80,000. Now, further to that, there are other items also, which are given as admin expenses or admin overheads, we can call them. Sales promotion expenses, selling overheads, we can call them. So admin expenses, how much? 2 lakh 40,000 and 1 lakh 20,000 is going to be the sales promotion overheads. Now, sales is how much? That is given as 36 lakhs. 36 lakhs is the sales, right? Then another information here given is about gross profit. Look at this. Gross profit is mentioned as 25%. Gross profit is mentioned at 25%, and it is said that depreciation is considered as part of the cost of production. But do we consider it? No, we will not consider it, because we are going to take it as cost basis for working capital requirements. But it is a cost, right? For the normal cost sheet, depreciation is a cost. So 25% gross profit means, first of all, how much would be the gross profit? 25% of 36 lakhs, which means 9 lakhs, right? 9 lakhs is the gross profit. That means how much should be the cost of production, ideally speaking? It should be 27 lakhs. Cost of production should be 27 lakhs. Of course, admin and selling will come later. Those are not part of gross profit. That will be after the gross profit. In the P&L items, these two are. So when gross profit is given, the cost of production here is 27 lakhs. But how much we got? Cash cost of production, 25 lakhs 80,000. So now simply cost of production, since it is 27 lakhs, how much will be depreciation? How much will be depreciation? Naturally, the balancing figure is depreciation. That is 1 lakh 20,000. We don't need that, but just for the filling of cost sheet completely, so that we have a full picture, it is better to have it always before going ahead with the estimation of working capital requirements. So raw material consumption, direct wages, cash manufacturing overheads put together, this is cash cost of production. Depreciation 1 lakh 20,000 added, this is cost of production. Admin overheads and selling and distribution overheads are also added. Then we have cost of sales, cost of sales. Of course, we need cost of goods sold with opening and closing stock of finished goods being adjusted. But are we doing that? No, we are not. Why? Same logic. Unless it is a new company, we don't have to do any adjustment. Why? Because if an existing company's data is given like this, existing company only, just nothing is mentioned as it is new company and all. If that is the case, then all the stocks, whether it is raw material, work in progress, or finished goods, stocks are assumed to be same at the beginning and end of the year. So no adjustment of stocks is separately required. Plus and minus does not give any difference. So cost of goods sold and cost of sales also will be here same. That is how much? Cost of production plus selling overheads plus administration overheads also. That is 3060. Now we have got profit as a balancing figure. Which profit is this? This is net profit. That is 5 lakhs 40,000. So we have a complete cost sheet with us in front of us. So this is cost of sales. This is sales. This is profit. Cost sheet in a nutshell. So in this, only point which was missing was depreciation. Since the gross profit data is given, according to that, the cost of production is supposed to be 2,70,000. Or cost of goods sold is supposed to be Same, because cost of production, cost of goods sold, why is it same? Since the finished goods are having opening and closing stock, same. So cost of goods sold, cost of production, both are same. That is 2,70,000. But cash cost of production was only 2,580 according to the information given. So naturally depreciation will be 1,20,000. That is the simple cost sheet preparation before we go with the computation of working capital requirements. Once we have that, it is quite easy since every information is just there, multiplication only. Let us look at one by one. Raw materials. Raw materials consumed is 9 lakhs and how many number of months the raw materials will be in the storage? 1 month's stock will be there, raw materials and finished goods, both it is mentioned here very clearly. So 1 month's stock will be there. So on the raw material consumption, whatever the cost of raw materials is, into 1 by 12. That's it. Same way. For finished goods, which one we should take? Cash cost only we should take. That is cash cost of production. 2,580 into 1 by 12 straight away. That is finished goods. Then accounts receivables. First we need to know number of months. What is the number of months for debtors given? Here it is given in the bracket. 2 months credit. 2 months credit. But do we take on sales? No. Cash cost we will take. So accounts receivable, we should take cash cost of sales. Be careful. What we have here is cost of sales. Cost of sales is correct, 3060. But from that you need to deduct 1,20,000. Why? Depreciation is included in that, in our cost sheet. But we need only cash cost of sales. So 1,20,000, if you take it out, that gives us cash cost of sales and into 2 by 12. That is debtors. Then amount of cash is given in the question straight away, that is 1 lakh. Then prepaid expenses, one of them is their sales promotion expenses are there, 1,20,000 paid quarterly in advance. Quarterly in advance means how many times it will be paid? 4 times. So 1 by 4 we can say 1,20,000 into 1 by 4, that is 30,000 is going to be paid in advance every time. So how much is going to be the total of current assets? Just keep it aside. Then coming to current liabilities, accounts payables will be related to the materials purchased. And again here material purchased and consumption is same. Why? Opening stock and closing stock of raw materials is assumed to be same since it is not a newly started business. So 9 lakhs. Same. Material consumption is equal to materials purchase. 9 lakhs multiplied with suppliers extend 2 months credit. 2 by 12. That is accounts payable. Lag in payment of wages. 1 month lag he said. 1 month lag. Already we have direct wages cost 7,20,000 into 1 by 12. That is 1 month lag. Lag in payment of manufacturing expenses. Cash manufacturing expenses 9,60,000 already we have into 1 month also. This is also 1 by 12. Then lag in administration expenses. Also there is lag. 1 month. All of them are 1 month only. So 2,40,000 into administration expenses are how much here? 2,40,000 into 1 by 12. That is administration expenses lag. So what is the total of current liabilities? That is 3,10,000. So how much will be the working capital requirement? Naturally 910 minus 310. That is 6 lakhs. But is it the final answer? No. Be careful. Clearly given 20% safety margin has to be kept separately. 20% is added to this requirement. So add 20% to that. Safety margin you can call it. 20% of this. That is 1,20,000. So finally net working capital requirement is how much? 6 lakhs plus 1,20,000. 7,20,000. So the final answer here will be 7,20,000. That is the net working capital required. Should be ideally. That is the answer. Working capital requirement 7,20,000. Simple. But we need to calculate the core things carefully. What is the core thing? Core thing is here. Here this is the core thing. For that purpose, cost sheet is helpful. No need of doing it in separate way for each question. All questions, if you follow a similar type of protocol, where you prepare cost sheet, then use that amounts in the cost sheet. Simply multiply with the number of months divided by 12, or multiply with number of days divided by 360 or 365 according to information given in the question. So the estimation of working capital will become relatively easier in that manner. This is how estimation of working capital will be done in two different ways. One was related to operating cycle method. Second one is computing the estimating or computing the working capital on the basis of cost structure and percentage of sales on an overall basis. If you look at, that's what it is. So on the basis of the cost structure and the number of days or weeks or months each item is going to be there held or stored, working capital requirements can be estimated like that. That will be the core of conceptual aspects of this topic, estimation of working capital. We'll continue this discussion with some more problems in the next session. Till then, take care. Bye bye. Thank you very much.